All right. So this video is an extensive video of the two strategies that I use effectively. Now, this Euro AUD setup, right? I had this setup. I shared it on my Instagram story. And then the AUD JPY that we all used to cash out before the news today, right? We already hit all our take profits before the news, and we already secured our trades to break even before the news. So we did all of that. Now I'm just waiting for price to load up. All right, it's loading. Sorry that it's being slow. I really don't understand why it's being so slow. Okay, okay. So the first thing that we noticed was that we had our typical zone setup, right? I've explained to you guys before how zone strategy works. Basically, zone trading, you anticipate a breakout of a specific zone. Then when you get the breakout of that zone, you practically want to see first bounce and second bounce. Now the highest point created by the zone is what you call your target point, and that's where you're going to be using as your take profits. Now, on the 15-minute time frame, we had what we call our build up. So basically, build up is your rejections that have been occurring prior to approaching that level. Now, before this zone was drawn out, you would just observe on the chart that somehow when price gets to this level, something is happening. It's not a coincidence that something is happening here. For some people, they consider this as levels of liquidity, and if you use the same concept, you see that these levels of liquidity are set in place, and eventually price gets to sweep all the liquidity resting here and distribute it to a level. Now you ascertain your highest point from the maximum point that price gets to before pulling back down for your first and second bounce. Now price got to this level, came back down here, and actually bounced here and pushed up, right? However, for just to make things a bit more clearer, we had another bounce. So to me, I said this is what I'm going to count as my first and second bounce, right? This here I counted as my first bounce, and this I counted as my second bounce. And what was my entry? My entry simply was in between this candle, because when the candle was rejecting here, I just had to wait and wait for the price to finish rejecting. Sometimes instead of me to jump into the charts randomly, I'll wait for price to be inside my zone, and then I'll take the setup. Now, this was 1:2, but of course, I saw that this wasn't the highest point peaked, right? This was just the point created after price broke out and rallied up before it got exhausted, right? But there was a higher point around here, and this was where we ended up using as our take profit for 1:3, which we hit early this morning, right? If you check my Telegram channel, I don't know if Telegram is openable, but if you check the Telegram channel, you'll see where I shared the signal around 12 a.m. last night. So we hit our 1:3. We slept, we woke up, we hit our 1:3. I flipped 55K to 200 and something thousand. Then as price was progressing, this way, LBS came up, right? An LBS setup came up on the 5-minute time frame. An LBS setup came up on the 5-minute time frame. Right. So as we were moving up this way, when it comes to LBS, there are a few things you have to look out for. The first thing is, remember when I told you guys, I was explaining to you that for people who trade for people who trade smart money concepts, they usually wait for, sometimes they will say wait for price to, break structure like this, right? So after the break of structure, you wait for the immediate pullback, right? Then most times you come back down to your order block, then from here you head over for take profits. So for SMC, this is what you have your break of structure for SMC, right? First step is your break of structure. Let me change this to white so it's clear. First step is your break of structure. Second step is identifying your liquidity, right, which is inducement. Then after the liquidity has been identified, you have a sweep of liquidity into your order block or breaker block, or depending on what your point of interest is, and this is what you have for SMC. However, for LBS, as long as you're in an uptrend, as long as your eyes can visibly see the trend, you're going to understand that there's already a break of structure. Now, yes, there is a break of structure, but that is not really a fundamental for what you're doing. For LBS, you have price moving this way, right? It's the same thing, right? It's basically the same thing. Then rather than having that one sign there as your inducement, for LBS, you have to wait for an inducement to form this way. It can either be equal, it can either be a bit lower, it can be like this, right? It can either be like this. So what you're waiting for now for LBS is a sweep of that double inducement, and this is what you have. Now, if you pay attention to this very clearly, you see that although you have your break of structure, but your priority is this as your inducement. And after that inducement, you can either use the fair value gap or order block, as the case may be. So this is extremely very similar to SMC. It's just the double confirmation, and that double confirmation is what makes it much more scarce, because I had to evolve my trading strategies to accommodate the capital I was managing for clients. I don't expect myself to find setups every single day, because that's just going to give me a lot of unnecessary exposure. Now, we were moving up. We had the first sign of, for those who trade SMC, you have your break of structure, you have your inducement, you have your sweep of the inducement, you have your tap into, I guess this might be the breaker block, and you have price pushing. Very good, right? SMC is already tapped in. For us, this was my LBS setup. Very clearly here, you see this is an order block, right? Now, you spot this as your break of structure for LBS. Break of structure identified. What next are you looking for? Your inducement in the shape of a double bottom. Now, the inducement must occur immediately after the order block, right? Or before the order block, regardless whether it's up or down. But it has to be, the inducement you're looking for has to be the double inducement before the order block. And as you can see, we have this, and as soon as price peaked all the way up here, you have this as your target point, right? You have this as your target point number one, and we have our natural highs as target number two, and you put your limit order, and you have your stop loss this way, right? This is what you have. Now, we ended up doing 1:5 on this. I made the announcement. If you followed me on the group, you also see where I announced it, where we hit 5%. So my stop was a little bit tighter than that, right? So this was something like this was what my setup looked like. So this is typical LBS setup, right? You have price progressing. Of course, SMC, you got your own entry. This is zone trading entry. You have your push. So you have your break of structure, liquidity, sweep, tap into breaker block, and push. Now, here you have your break of structure, double inducement, sweep of double inducement, tap into your order block, and push. Right now, this gave us 5% and this gave us 3%. So I was able to move this from 50k to 200k, and I was able to move this from 200 to 300. I wanted to get to 500, but there was a high. There was another position up here. As you can see, this was where my alert was. I was hoping that price would come up to this alert. So I already told everybody, if we've already hit both targets, secure your profits and do whatever you want to do. Or if you have balls of steel, hold. So this is zone setup for today. Now we also caught another zone trading setup today as well, right? There was also another zone trading setup today on Euro AUD. Remember, it's the same pattern for zone trading. The same pattern. First, you have your build up. What is the build up? The build up is price rejecting from a zone. That zone might just be price just moving randomly and suddenly stops moving somewhere. So you have this is your build up, right? Then you have your violation, the great pull, right? Price has broken out of your zone and created the highest point. Now price came back here, first bounce, second bounce, pushed and swept for take profit already. So on this one, we've already even done our necessary 3%. Let me show it to you, right? Our necessary 3%. So this is price already gave us our 3% after the sweep. So this was what we ended up closing for, right? 3%. But as you can see, price ended up moving way past 3% to 4%. Now what price did was, if you go to the 1 hour time frame, you see that on the 1 hour time frame, this is first bounce, this is second bounce, build up, breakout, first bounce, second bounce, push to the highest point. And on the 1 hour time frame, you would have got yourself a very decent 1:4 entry, almost 1 to 4.5, right? This was, and the thing is, so both strategies are extremely effective, right? However, they are scarce. There are times when this zone trading setup, I will only see two or three, maybe, and the next time I will see another one will be next week or next 2 weeks. It's not like as if I sat down on the chart and scroll through all the pairs I have on this watch list, definitely I would absolutely see setups. But the thing is, trading an account or trading capital for investors, you don't want exposure to be high, right? You don't want exposure to be high. I would have finished extremely strong and gotten a massive bonus by this year end, but my hedging module system hit a small snag. And if you go and check about martingale hedging, you see that it's quite dangerous. Throughout the year, we were running with our hedging system, no issues, we were delivering our percentages. But we got towards the end of the year, something was happening with the market, and there were just so many rallies. There were so many rallies that were encroaching into each other, so it was just a lot more difficult, and our system failed. So I made the call to um terminate the system first, and I had to use some of my bonus money to sort out ending percentages, and that was the end of the contract. I did still get a huge chunk of money for my bonus, but it's not like it's typically, oh, okay, you get your bonus, you buy a fancy car, you trend for a little bit, right? But the bonus I got is a kind of, okay, cut your coat according to your size bonus, right? Today I got two setups on, you know, one on EU, one on AU, one on EU, one on EA, and one on AUD JPY. Now, this is also another zone trading setup I was anticipating, but it ended up providing an LBS that didn't completely play out, right? Now, price created this double bottom inducement. You have your sweep of the inducement, but price didn't completely get back to our zone. Assuming price got back to this our level here, I would have taken it, because most times when I confluence zone trading and I confluence it with LBS, I usually get spectacular results. Right. So hopefully hopefully this tutorial that I'm uploading now would have explained a lot more things to you as to, you know how both strategies work, right? Some time ago, an LBS setup on the 5 minute time frame on BTC, but I didn't have the initiative to hold for too long, right? Let me go back down to where the setup was. And it was extremely very similar to SMC, right? It was extremely similar to SMC. Um Very, very similar. So let's shift this volume profile. I also had the volume profile as a confluence and I used it, right? So let's remove the volume profile. um n- Not the second entry, not this one, this entry here. So you have price pushing up, then you have this formation here as the inducement. What's the nearest liquidity? What's the nearest other block to it? This one. You have your sweep of that, and as soon as that got broken, we got tapped in, and the rally is extremely crazy. So I could have given the call at 80k, and right now we're sitting at 90 something k, and yeah. But as at the time, I didn't see price pushing past 80. I was just going to wait for another setup to form and then I'll take it. So basically you can use LBS, you can use zone trading, and I just been adding order flow to increase my profitability lately. And yeah, so there's a lot more to come. Stay tuned, stay active. There is, so now typically if I want to trade this GBP card now, I can already see that there is something going on here. There's already a breakout, but there is some rules governing zone trading. So if price has broken out already and the highest point created, so this is the previously existing high point. So after price creates a new high point, maybe around here, and pulls back for first and second touch here, you can ultimately try to take TP to that side. If that place breaks, the next target is the highest point created, right? So this is a breakout of this zone now. On the 1 minute time frame, you can see first bounce. There's probably going to be a second bounce, and price will propel come back to this, because this is actually just, here is the first bounce, this is the next highest point created, right? If price bounces here and comes back up here, if you're quick on the 1 minute time frame, you can take a short scalp, right? You can take a very short scalp and walk away with more than, you can still walk away with 3% with high volume short scalp. Take your 3% and go, and your 3% will be complete in 10 pips. So you're going to have to use zero spread to really enjoy this, right? Zero spread to really enjoy this. But that's the core concept of LBS, and that's the core concept of zone trading. So hopefully this video helps you guys, and when you understand this fully, yeah, so once you enter your chart, like, you don't even need to do too much. Once you just get into your chart and you plot it, you will start to see these things I'm talking about. Most of the time, it might be difficult for some people to understand PDRA, this, SMC says, the SSS, blah, 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 blah. I don't know. I'm not trying to mock the strategy or anything. But I'm like, this is a simple price action technique that never stopped working. A lot of people just gave it bad PR, but this is extremely profitable. If I go to my screenshots that I've been saving since the beginning of the year, you will see that this strategy has been working. This is the same thing I taught my students, but a lot of them prefer to use SMC because it's fast paced. I need you to handle capital larger than $100,000 that doesn't belong to you, and that's when you would appreciate strategies like this, because then you know that when you see one setup, you calm down, you risk your 1%, you walk away with 3%, you give your investor your 3%, you wait for the next one. If it comes after 1 week, you calm down, you put your 1%, you take your 3%. If it's 4%, you take your 4%, you give your investor 3, you keep 1% for yourself as a payout. At the end of the year, you collect your chunk of bonus and you're good to go. Do you understand? So this is what I've been living by, but I don't think I'm going to be renewing any contracts, mostly because I want to explore independent trading on my own once again. There were times when I used to trade independently, but ultimately, um you know, larger capital attracted me to take on the responsibilities of a of large equity. And then now, after large equity, I have some experience, and yeah, so it will depend on what I get for my first bounce and second bounce. That's what would determine how many percent I can make off this trade. For those who trade SMC, there is already break of structure, liquidity, and this is order block. So for those who trade SMC, they'll be looking to trade off of this level here, which is also similar to where I have my entry. Sweep of this inducement, tap into this level, and progression. which is not a bad idea. So most of these strategies are very similar. Okay, I can actually see something forming for LBS here. Okay, the zone is too far apart. Now, of course, I will go into detail in another video, but you don't generally want your inducements to be like this, right? Because this on its own is another form of liquidity. This to me is called compression. Sometimes when price compresses like this, if it compresses like this and fails to break below to sweep out all the liquidity, the next thing is to push to the upside for what you call impulse correction impulse, right? Rally based rally. I don't know how many of you learned this at the beginning of your price action journey. You must have learned rally based rally. It was very common when I was learning. So this is what you have. If this liquidity area here was something, something like this, right? Maybe around here, then very easily I'll mark this as my order block. I'll wait for a sweep of this, tap into this, and good. Probably another 3%, 4%. So I'm just trying to scroll through. I see a potential zone trading setup on gold. If I can get a double bounce here, I would look to sell off quickly just down to this level here. Now, when price breaks out and retests your zone immediately, that trade becomes invalid. There is no need for you to start waiting for it to bounce, push, and start looking for how to manipulate price. No, don't do that. Just walk away from the price, right? Walk away from the chart. As soon as your position has been violated even once, walk away, wait for better opportunities, even if it takes you a week. Next week, I get another entry. I put $1,000. I try to flip it to maybe 2K, 3K, 5K, depending on how aggressive I am. And that's basically all I need to do for the rest of my trading career, right? I love SMC as a concept. It's one of the most profitable concepts ever, but to me, SMC is really fast paced. I mean, if you have access to more than one or two charts, you're looking at 2 setups, 3 setups per day. So you have to find a way to build the discipline to not take those setups. So what happens when you have a series of losing trades? Your psychology, how do you keep it in check? With zone trading, I have 3 trades in a day. I take two. My maximum exposure is 2%. I'm done for the week. I will hit one, take profit, hit one, loss, cash 4% on one, -1 on the other one. I'm solid 3%. I'm chilling till the next week. This is the advantage of having large capital. I spot another setup. If I'm very, very aggressive that week, I deposit $2,000. I have my aggressive entries. I flip 2K to 5K and I'm good to go. The same way I did today, flipped 50K to 200, 200 to 300. Simple and short. Anyway, I hope you enjoyed this video. Please tell me what you have to say in the comments. Ask your questions. I'll be answering all your questions in the comment section. Let's get it.